Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 27th. My name's Eric Wilkinson and you very well may recognize me as the Wolfman from mainstream media. What I'm here to do is not only talk about the economic data and how that impacts the markets and our global economy for the most part, but to talk about options and how we can trade options in our portfolio, all different kinds of scenarios. I don't just cherry pick the trades that are working. I talk about all of the trades. The ones that aren't working, I probably talk about more on this daily market commentaries than anything else, because those winners come and go quickly. We get in and we get out. The losers are the ones that we need to stay mechanical with and constantly try to lower our basis to turn the tables on a losing trade. All right, so without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, we've talked about this all week, waiting for it today because we have a plethora of economic data that should give us a good insight into the strength of our economy here in the United States. Not so much across the pond today, but here in the United States, we got core durable goods orders that came in at 0.6%, expected to be 0.2%. So core durable goods orders higher than expected is a good thing. Just keep in mind that that core durable goods strips out transportation. Then if we look at, because it's a more volatile aspect of that number, but if we look at durable goods, including those autos, heading into a holiday season, usually we see those wane a little bit. It was expected to be a negative 0.5%. Well, it came in positive at 0.6%. So nice beat there. No drag. A lot of people going out there probably taking advantage of these low interest rates. They're going to see lower interest rates on used cars and things of that nature, and even new cars for that matter, if they are still offering 0%. Which you probably will start to see a lot of because they're trying to get rid of that old inventory. So we're seeing some cars being moved as well. That's a good thing. Preliminary GDP coming in at 2.1%, expected to be 1.9%. So a nice beat on that. Preliminary prices for GDP coming in at 1.8%. That's generally a good thing when we see higher prices. That shows demand essentially. And then unemployment claims coming in at 213,000, lower than the expected 223,000. So less people looking for a job. That's supposed to be a good thing. Not seeing a lot of people coming off the sidelines to look for a job, which we saw last month. Remember when I talked about that seasonality of that, where people who are claiming unemployment, if they have been out of the job force for a very long time, then they have a tendency to wane a little bit and maybe not collect unemployment. Then they all of a sudden aren't part of the statistic. So not seeing a lot of people come off the sidelines there, but because we're at full employment, I would expect to start seeing those unemployment claims start to dip a little bit. All right, PMI, Purchasing Managers Index. We got the Chicago PMI. Anything above 50 expansion, anything below 50 is contraction. Well, we got another below 50 there on this one. Coming in at 46.3, expected to be 47.2, albeit that is higher or less negative, I should say, as a 50, below 50 being less than what we saw last month. Last month it was a 43, so it's getting a little better if you're looking for a silver lining in and around the Chicago PMI. And then we got core PCE, which is personal consumption expenditures. Prices index coming in at 0.1%, expected to be 0.2%. And similar to the prices index that we saw in the previous number, this one's a little bit more important, but again, they would like to see those prices go higher because that shows that there is some demand. Personal spending in line with expectations at 0.3%. Now, remember, pending home sales. Pending home sales is more forward-looking. It hasn't gone through. We've seen existing home sales and new home sales. Those were actually much better than expected recently. And I talked about lower interest rates. Maybe it got people off the porch and looking for their new home or add new home to them. This one is forward-looking, like I said. Pending home sales, not so good. Coming in at negative 1.7%, expected to be a positive 0.2%. No revisions of the last month's number. Not liking that number so much. We are heading into winter. Winter is usually a lull for this type of commodity, if you will, or your asset. Most people aren't looking for homes around the holidays or in winter for that matter. All right, so personal income waned a little bit as well, came in unchanged, expected to be a positive 0.3%. We want to see that number move up, right? Because that means personal income increases. That creates the ability to spend more. Crude oil inventories, a build of 1.6 million barrels, expected to be a drawdown of 0.5 million barrels, all right? So we'd like to see that number. You know, we'd like to see, if you are bullish in crude oil, you'd like to see that, or if you believe the economy is getting stronger, you'd like to see that number draw a little bit. But we're seeing that build, and I've been talking about that. That is a indicator as to what's going into the manufacturing sector as well. So we haven't gotten natural gas storages. That comes out in a couple of minutes. But I'm just going to move on with that. I'm guessing it's going to be pretty. It's not a major market mover anyway, so we can skip by that one. All right. Keep in mind, we do have Beige Book coming out. That's one of the. That's later on this afternoon. Keep your eye out for that. That's a number most people overlook, but that's the one the FOMC really takes a look at. Now, it comes out a couple of weeks before the FOMC meeting, but they get one that's a little bit closer to that meeting. It's called the Blue Book, but the Beige Book is very reflective of that. Yes, the Blue Book is going to have more recent data added into that, but something to keep an eye on is that Beige Book, because that is what the Fed is going to be looking at for interest rates. All right, let's move over to the markets right now. We've got crude oil coming off, as I would expect with the build, right? You know, higher supply, lower demand should cause these prices to fall. Maybe we'll get outside of that $58 a barrel. I'd like to see it again go down into the 55, lower 50s area. That will allow gas prices to come off, and we can spend that money elsewhere, especially heading into a holiday season. That creates velocity of money. If you can spend $10 elsewhere on a cup of coffee or on an extra toy for your kid, then that is going to create that velocity of money where that money is spent elsewhere. You know, if you're buying something $10 with a small business rather than the gasoline, then that 80 cents is actually kept, 80 cents of that dollar is kept within the community. So that is what I'm talking about with that velocity of money going forward. All right, gold futures are coming off a little bit today. Not looking like we're going to look to test that 1500 anytime soon, which I've been looking for us to go up and retest this area here, which is lining up with right around 1500. That would cause us to get outside of the value area, but I believe there's a paradigm shift ready to happen where the market sees value from 1300-ish here in gold a troy ounce to the 1500 mark up here. You know, with lower interest rate, a weaker dollar, that should drive prices higher in gold futures. So I am expecting gold to start moving higher. I don't have any position in those, either crude oil or gold at this point in time. Bonds are coming off by about a half a point right now. We are trying to test this 160 area. I've talked about this. I think we are going to hang out in and around here. The Fed will, you know, get this Beige Book later on today, and that's going to be a big determining factor. But they seem to be throwing some talking points out there with these lower interest rates. You know, it actually helps their balance sheet. You know, for every percentage point, it's like several $1 billion off of their balance sheet. So I think we're going to stick in and around this 160 handle. I don't think we can peel too far away. Remember, we're not going to go down in price because that would mean interest rates are moving up. We're not seeing that kind of strength in the economy to start increasing interest rates at this point. If anything, it's kind of at balance, if not a shift to lower interest rates in my mind, and that would cause bonds to move higher. Remember, it's all about that teeter-totter effect where if interest rates go up, the bond prices go down, and if bond prices are going up, then interest rate prices go down. All right, so we're looking for that to happen. I think it should move back into the 160 handle, you know, and kind of hang out in and around there. Check this out with the VIX. We are at the 52-week lows for the most part. You can see the low is 11. That's usually when we get overextended. We should expect volatility to start expanding, heading into maybe December, which doesn't always happen when we get into December, but it can. As you can see, last year we got that major spike. So anytime, even any markets, right, you get to the extremes, you expect a bit of a reversal. I'm a contrarian, so I'm a little bit biased to that, but I do expect interest rates to start moving higher. So I am constantly looking for opportunities to buy option premium so that if we get that expansion, it really helps me out. I didn't do that today. I actually added some short puts in a stock that we'll talk about here, just because it was one of the few ones that had really high implied volatility, and I wanted to take advantage of it. All right, Dow Jones Industrial Average, a new all-time historical high, as you can see, but that was right on the open, and we continued to slide after that, maybe due to the economic data there. We even saw NASDAQ create a new all-time high. We're very close to that all-time high right now, but if we strip this out, we can see our all-time high is actually what is being traded right in and around now, because that overnight high was printed. Market really trying to get up there to print that. They did a nice move yesterday in the equities where we talked about the overnight high being printed overnight. And that being said, with that overnight high being printed overnight, we tried to get there but didn't quite make it. We still have a new all-time high here in the E-mini S&Ps, as you can see right here, with the 3146.5, and I believe that was, unless we went, oh sorry, here we go, we get the extended hours. You can see the overnight high was printed overnight in the E-mini S&Ps as well, and a little bit easier to see this when we show it up on the 30-minute chart, which breaks down each day section. Is the black area, the overnight session is the grayed out area. This was that high that we saw yesterday we talked about. Tried to make a valiant effort towards the end of the day to come and print that during the day session, but just came up slightly short. And again, you can see that the overnight trade was very bullish. They flushed themselves out, so I could say that the inventory overnight was relatively equal. But then with the economic data coming out right around in here, you can see the equity started losing some steam heading into the day session. Now we have printed the high, a new all-time high for the day session, but now we've got to get up there about 4.5 points higher to get a new all-time high during the day session. Now with the economic data the way it's come out, I don't know if that's really going to happen, but Deere came out with some earnings today. I didn't play it, but their forward guidance was a very grayed out and not very lackluster look at the forward-looking economy. So that caused Deere prices, even though they beat on earnings, to really come off. Like I said, didn't play it. But let's talk about the ones I did play. With Apache, APA ticker symbol in here, I went in and did some puts because we are pretty low here. It's been trending sideways, if not higher. We could say that we've got higher highs. If I look at it here, higher highs and higher lows. Okay, so to me, it is trending higher. The other thing is we got the point of control right here. So that being said, it made me believe that I could go in there and sell some Ds, and I sold those 19 puts. So I sold the Ds 19 puts. You can see the low here is 1944. I don't believe that we're going to get much lower than that. So I don't think it's that bearish. Their earnings weren't that bad. So forward guidance, not too bad either. So those Ds 19 puts I was able to sell for 52 cents. So I'm getting into this where that puts my break even. My break even now is at, when the underlying is trading at $18.48. Okay, so that gets me below this low there as well. And you know, the value area low being right there, that is going to be another support area. And we can see that even after their earnings, we weren't able to get down there lower than 19. That's really where we saw a lot of buying coming in. As you can see with the volume nodes here, when it starts getting down to that area, we start seeing a lot of influx in cash. So all of those things leading me to believe this is a really good trade. It is right in line with my I did it with the 17 delta. There wasn't a 16 delta, so that's in line with my rules for this underlying. You can obviously see we've got really high implied volatility. It's at 100%, so that was in line with that. So all of these things gave me the opportunity to get in there and sell some puts in there. Now, right now, it is probably against me a little bit, so you know, you could probably get in better than where I did. It looks like it's trading around 62 cents right now. So if you want to jump on board, make sure it's appropriate for you and your portfolio with your risk parameters. And make sure you know all my rules and check out those webinars, all right? We've got a webinar today because tomorrow's Thanksgiving. I want to hope everybody has a great Thanksgiving and eats lots of tryptophan so they can crash out on the couch and watch some football, all right? That's about it. That's all I got for you guys. Go to protraderstrategies.com. Sign up for that webinar today. It is the last of our series. I'm going to be starting a new course, so keep your eye out for the new course as well. It's going to be quite a bit of a different setup that we're looking for. It's going to be more about implementation of options into our portfolio when we have like an existing portfolio of some stocks as well. All right, so have a great Thanksgiving, and if you can't take that, take it easy.